am a disciplined and a profitable trader. I trade smartly and confidently. I have the mind of Christ in me, and the wisdom of God is at work in me.
Hi, good day everyone. Welcome back to my YouTube channel. So today we will continue the topic we started some weeks ago, and let me use this opportunity to apologize for taking a bit long before releasing the next episode. I have been a little bit strong. I was just waiting to be perfectly okay so that I can record the next video and post it for you guys. So I apologize for staying a little bit long. Let's just go into the business of the day. If you're a returning subscriber, thank you for sticking around. I appreciate. Don't forget to like and comment. But if you're a new subscriber, don't forget to subscribe, like, share, and comment. In our previous episodes, we've been talking about trading foundation, and we gave out this list that these are the list of the things we are going to be learning going forward. And the first topic here is understanding the financial market environment, which we are going to talk about Forex, what Forex is all about, crypto, indices, commodities, stocks, and synthetic. But our main focus on this particular number one topic is explaining what trading is all about and explaining Forex in details. Then crypto, indices, commodities, stocks, we could just brush through it if you still have the time to do that. Now, let's go deeper into the topic of the day. Now, what is trading? If you wake up one day and make up your mind, I want to learn how to trade, the first thing you would ask yourself is, what is trading? So I wrote it down here. Trading simply means the buying and selling of financial instruments with the aim of making profit from price movements in the market. In simple terms, trading means taking advantage of the difference between the price you buy and the price you sell. So trading simply means buying and selling of assets. I'm sure some of you have heard of the terms stop loss, take profits, entry price. When I said taking advantage of the difference between the price you buy and the price you sell, it means if you buy a particular currency at a particular point and you decide to take it to a particular point, which will be your own TP, that is where you are selling. You just feel like your TP is you're leaving the market. As you are leaving the market, someone is ready to buy it from you. So you are selling it to the person while they are buying it from you. Trading is a business and you really need to treat it as one. In olden days, people exchange what they have. If you have clothes that are no longer needed and you feel you need food, what would you do? You will go to someone that has food, that needs clothes. You trade your own clothes for food. The person is collecting the clothes because he or she needs the clothes and giving you the food. What happened there? That means a trade has occurred. The same thing happens to this Forex trading. The logic behind trading is you are buying from someone that no longer needs that asset, and once you hit your TP, it means you have programmed it that if you reach this particular price, I am selling it out to whosoever needs to buy this particular asset. Understand these facts before we move forward. So you know that trading is a business. That's the point I'm trying to establish here before we go further. Moving forward, as a retail trader, we have different kind of trading. But for the kind of trading that you want to go into and the kind of trading I am doing is called retail trading. As a retail trader, we speculate, anticipate, and predict the price movement of an asset, either to go up, also called long, or come down, also called shorts, based on our knowledge of the market. We only speculate, anticipate, and predict price movement because we're really the market movers. I told you earlier in the past episode that you don't move the market. All the retail traders combined together, we only move from 5% to 7% of the market. As you are individually, you cannot move the market. You only participate in what is going on in the market. And there are a lot of factors that can come in place in doing this. For you to make you be a successful trader, you need to consider the fundamentals, the technical part of it. There's what they talk about, history repeating itself. That is exactly what trading technicals is all about. These patterns keep on forming every day. Coupled with the fundamentals knowledge you have, trust me, you're going places. By the way, if you know you've not watched our last video I posted, which is the weekly analysis, go back and watch it because all the analysis I made there, they've all eaten our TP. I take out my time to make these videos just to make you guys be a profitable traders and having a good hedge in the market basically. Now moving forward, trading styles. What are the trading styles we have? Well, there are different approaches to trading, and I feel this actually depends on your kind of person. Well, there are different approaches to trading, and I feel this actually depends on your kind of person. Trading is more of knowing yourself. You cannot be a profitable trader without knowing the kind of person you are. Trading will push out your real color. So you need to study yourself, know the kind of person you are, know your temperament, know your personality, know your risk tolerance, know what you can take and what you cannot take. For you to know the kind of trading style to be trading, you need to know your personality. We have scalping. Scalping is basically if you are in the market for a few seconds or a few minutes and you make little profits, but you will take many trades. Then we have day trading. This one lasts within minutes to hours, but within the same day. This actually gives you medium gains, but it lasts between minutes to hours. Then we have swing trading. Swing tradings can actually last for days to weeks, and it gives you larger moves and larger gains because now you are leaving the trade to run for days and even weeks at times. Now we have position trading. This trade actually lasts for weeks and months, and it gives you opportunity to higher gains and higher moves, but it's just that it's very slow, unlike day trading that you've made your profit in a day and you're out of the market. Now moving forward, types of trading. The first one is forex trading. Other types of trading, we have forex trading, which is our main focus. What is forex trading? Forex trading simply means foreign exchange, exchanging one currency for another. What is forex trading? Forex trading is a global marketplace for buying and selling currencies, and it is the largest and most liquid financial market in the whole world. It has a daily trading volume of around $7.5 trillion, according to the Bank for International Settlements. It is traded 24 hours in a day and 5 days a week. So you can see that forex trading is a pool of money. So this mentality and this belief that the big boys or the banks are after your money, my brother, my sisters, you're too little for them to be after your money. The banks have separate rules they play in the market. They don't even know you. They don't know you exist. They only know you exist, but they don't know you because the impacts are not felt. Let's move forward. Factors affecting currency price. The first factors that actually affect currency price is interest rate. I will explain these factors in details when we get to fundamentals because this is a fundamental aspect of trading. So things like interest rates, it affects the movement of currency. For instance, now in our last weekly analysis, I talked about the fact that Powell gave a speech that was dovish, and we all know what dovish is all about. Dovish means reducing, cutting interest rates, and if you're cutting interest rates, it means the currency would weaken. And if the currency weakens, investors withdraw their money from that currency and put it in safe havens like gold. For instance, let's say USD JPY, and US dollar is the base currency. You see that kind of currency coming down. But if the US dollar is the quote currency, you see that kind of currency going up. If they cut interest rates, that particular currency will definitely come down. But if they increase interest rates, that means they hike it or hawkish. It means that particular currency would appreciate because investors will be very interested in it. They believe it will be higher returns for them. So higher interest rates, higher currency. Lower interest rates, depreciation of currency. Economic indicators. We have economic indicators, things like GDP growth, inflation rates, employment data. They have a way of impacting the market. So we talk about how these things affect the markets when we get to the fundamentals part of it. We'll make your research, study even the Bible says it says study to show yourself approved. Study these things even before we get there so you can have proper knowledge of what these things are all about. Then we have political stability. Political events and stabilities can greatly affect the value of a country's economy. We have geopolitical events as well. Factors like war, trade disputes, international sanctions, and global summits or alliances can create uncertainty, increase market volatility, and often push traders towards safe havens. During Ukraine and Russian war, you see that there's a massive impact. Like the market was buying during those time. It will affect their own currency. Their currencies will definitely come down, but gold will go up. So we have market sentiments. This one simply refers to the attitude or the mood of traders, be it retail traders, investors, and hedge funds, people all over the world, their feelings and the emotion towards a particular asset. Moving forward, who are the market participants? Now, the first people that participate in the forex market, we have the central banks, and they're in charge of the interest rate, inflation rate. They influence the currency value through monetary policy. Then we have commercial banks. Large banks facilitate forex transactions for their clients and trade for themselves as well. Then we have hedge funds and investment firms. They manage money and invest on behalf of clients or themselves. Then we have retail traders as well, yourself and myself. Retail traders are individuals who trade currency through online brokers on trading platforms like MetaTrader, sea trader or trading view. Basically, for you, Forex might not work for you. It might be crypto, it might be indices, it might be synthetic. Study them and know how these assets move and how they operate. Now, with all of this being said, I would love to end this particular series here. Then we continue the next topic in our next video. Don't forget to subscribe. If you are new here, don't forget to subscribe, like, comment, and share the video. You never can tell who would be in need of this particular video. So do them a favor by sharing it. This is basically the foundational knowledge that you need as a trader to be a successful trader. Ladies and gentlemen, with all of this being said, I will see you in my next video.
I am not a failure, and so I cannot fail. I am constantly learning to